right, let's do this. Get rid of that. All right, so we'll be looking at stop losses here, and also we're going to get into profit taking, okay? Because a lot of people don't understand how to take profits. And at one point, I didn't understand how to take profits, okay? So that's why I'm making sure we hit this right on the head. So we're going to be looking at Bitcoin after the end of the 2015, 2016 bear market. Again, I think currently, if you're watching this and you're well aware of the current market, I think Bitcoin currently is either in this stage or this stage. All right, so either way, what's to come is a bull market. And most of us are preparing for a bull market and to not lose money in the bear market and to preserve our capital. Right, so I'm going to do this from the assumption that you're entering into a bull market, right? Because I think that's what most of you will want to know about. When it enters bull, you want to know how to make a lot of money. But again, we can, here, like I said at the beginning, along with your day trading, your core trading, swing trading, all this stuff applies to each exactly the same. And so everything I'm going to talk about from the long side here and on is exactly the same, but with shorts in the bear market. Okay, so if you guys personally want a short video on this too, hit me up. I got you, and I'll happily make one. But I'm going to do this from the assumption of someone trading long at the start of a bull market. Okay, so we'll be looking at, again, we're doing swing trading, so I'm going to be looking at the daily and the 4 hour. All right, so let's get right into this. Price has just made a higher high. Okay, your daily bands are in an uptrend. You're trending above pi and the 200 above your bands. The 8 is rising. Everything's looking solid. You're starting to get ready to buy pullbacks. Now, when price gets up to these levels, right, look at the cycle. There's not really great risk reward to be buying up there, right? Price has just gone up almost 100% in a couple weeks. So, and look at this volume candle. You don't want to be buying into a huge volume candle like this at the end of a move with your cycle high, right? If you get a volume candle like this at the start of your move, right? A nice big candle like that, maybe then you can buy or buy a pullback, but a huge volume candle at the end of your move, or even here we get 2 of them. See, you can buy a small piece if you're really having FOMO or something. That's the nice thing about entering most of your size with the cycle, is that I can buy a small piece. I can FOMO a small piece anywhere pretty much. There, here, the very top. It doesn't really matter that much as long as I'm keeping my size right. Okay? So maybe I buy 5% of my size. We could even say it's the very top at like $500. But because I'm only buying 5%, check this out. Okay? At this point, we're waiting for a daily cycle pullback. Right? Here we go. We got below halfway here, which is 40. Getting nice and low, and we get an engulfing setup right at the bottom of the bands. Okay? This is a great chance to start to add. All right? So we added this little 5% up here. And now let's add, again, the cycle is not crossed on your daily, so we can't quite go super heavy yet. But we can add another maybe 15%, right, in this region. So now that brings our average with this 5%, somewhere in here, right? And then once I get the cycle cross, boom, bang, right there, now we can start watching for more setups. Okay, here we get a nice, potentially a bottoming tail. We're on the right-hand side of our cycle, meaning our cycle is crossed and is rising. Get a bottoming tail here. So now that our cycle is crossed, I'm going to hop into the 4 hour as well and see if we can't get some good risk reward on these setups. Okay, so we see this engulfing here from the bottom of the bands. That lines up with this bounce on the 200 in our 4 hour. I'm going to get rid of these fibs. They're a little annoying right now. Right? So this bounce is the same as this, right? And our cycle crossed on the 16th of November, which was in here. Okay, so at this point, we can start buying dips on our 4 hour and on our daily. Well, we're already buying the dip on our daily, right? It's already dipped. We're just waiting for the setup. And so for this entry here, your stop goes below the low, right? This is a candle setup, and assuming this is going to go up further, this will be the low and a key higher low since down here. And previously, when you buy your 5% up here, the reason you can only buy 5% is like we're talking about with that trade-off, where the further you are away from your stop, the less you can buy. And look, this stop is really down here. Like this just went straight up. I don't really have anywhere I can put a stop other than the higher low, which is, a massive drop. And for that reason, you can't really enter that much, right? But now I got a candle set up. Okay, I know my defined risk is now 11%. Now I can actually start to work my position. I can start to enter some more because I have a smaller stop. I can also put that stop for the piece I bought up here. Okay. And so now I bought 15% here, 5% here. I'm in 20%. So maybe this is the core position I want. And for this piece, for all that I just bought, I will not stop out until my higher time frame, my weekly, breaks down, which we found out was at 6,000 later on the end of the bull market. Okay. And so the rest of it, the other 80%, waiting for the daily cycle cross, and now we're buying dips. Okay. Here we got our 4 hour cycle coming down. We're waiting for a dip. There she comes. There it is, waiting for a nice setup. The cycle is nice and low here. Potentially a small bottoming tail setup right in front of here. And think about this. If you were happy buying in here, right, and here, and price comes closer to your stop, doesn't it make sense that you'd want to add more, right? This trade was still solid to you, right? So why wouldn't it be right now, right? Making some sense. And now you add here, and you're still using the same stop, but the piece you add here is only a 5% stop instead of the piece you bought up here was an 11% stop, right? So you can add a little bit more size. But again, the majority, you're waiting for the daily cycle across, which we did get on the 16th, which was right in here. So now you can actually start adding large size on the next setup. Okay, so we get this 4 hour cycle dip. Cycles cross back up. We do not have a clearly defined candle setup yet, right? This is a very small wick, so would not really consider this a quality bottoming tail setup. You're still below the 8 too, trending down. What is this date? The 20th. Let's go look at the 20th here. All right, that's the 20th. So you do have a potential bottoming tail on the daily forming, right into this low here. See the next day, and the next day you do get follow through. You get a positive candle. So that's your entry right there on the daily. All right, your cycle is rising. And now here's your choice. You can have a tighter stop right below the candle setup. Right, you enter here. That's a nice 4% stop, which means you can use a lot of your size. Or instead of using a candle setup stop, you can use the full-on market structure stop, the key high or low here, because that's going to keep you in the trade the longest. But then your stop's going to be back to about 9%. So it means you could use half the size you could use if you use this stop. But it might mean not getting stopped out because you used the right stop. So that's totally up to you. You can do a split if you like, half under the candle, half under the higher low. I tend to keep mine with the higher low just because I like staying with the trend. All right. All right, now let's see if we get follow through on this bottoming tail setup. And there we go. If you didn't buy the bottoming tail setup, which is totally fine, this is the setup to buy. Your cycle's crossed up on your main trading time frame, your daily, a bullish engulfing setup, and then same thing goes with this setup. You can either use the stop below the setup or you can keep the market structure stop. It's up to you. All right, we got the cycle low. You got the setup. What was this date? 25th. Let's go look at our 4 hour and see what it looked like on the 25th. And it looks like this, okay? Let me make sure I get to the very end. Okay, this is the end of the 25th. So we're getting back above the bands on the 4 hour. That's good. Our 8 is now rising. That's also good. And we really just got to focus about breaking these lower highs here. Right, when the market broke down, the first place it spiked to was here. Right, that's where the liquidity was. That's where the sellers came in. So price has got to break through that to show confidence. Else we might just make a lower high there. But yeah, as we know, price broke through it. And so now we'll get into this profit taking, okay? So what you want to do after you buy is you want to sell 25 to 33% on the first move up as price moves in your favor. Okay, this typically will be the first 2 to 3 candles after the candle you enter on. And the reason you do this is because you want to make sure that once you're in the money, you don't just go in the money and then let your stop get hit for like minus 5%. Like you do not want to do that. And I still do it occasionally, bad habit, but you don't want to do that. It's not a good way to keep money. Okay, and so this way, if you take 25 to 30% off on the first move, 1, 2, 3 candles, right? Oh, maybe we reached some resistance here, an old support, right? You can look at a fib level or something. Maybe it's back halfway. What was this date? The 28th. Let's look at the 28th on our 4 hour. Right? It looked like this. So a big topping tail here, back at this old support level. Also 2 cycle crosses down. I'm very sorry if you hear that baby crying in the background. I wish it would stop. Hopefully my mic does not pick that up. Okay. So you've got your 4 hour cycles crossed down and you're on the first 2 to 3 candles up after you entered. You still have a stop of, 10% or 4%, right? So you want to make sure you can take profits here. What was this move? Hold on, I'm going to mute myself. I got to sneeze. Excuse me. Right, so this was a 8 to 10% move. Okay, so you want to take profits on that so that if your stop comes back and gets hit, that you're not at a loss. Right? So we sell a quarter there, maybe a quarter up to a third. And then if you ever get big distance between the EMAs and price, you're going to want to sell 50 to 70% of your size. Right? Ideally, we want to sell when a cycle crosses down, we get a bearish setup, right? But if price just goes, if the cycle's at this point and price just goes straight up away from your EMAs, you don't have to wait for the cycle to get high, right? Like say if something like this happened, and look at all the distance just between the 8 and price. If that had happened when your cycle was still, somewhere down here, you wouldn't have to wait for all this to happen to take profits. Okay? You sell half to 75% when you get big distance. And then you know what? If it keeps going, great. You got a quarter left that you can trail out with stop losses below candle setups, right? Meaning if you get a huge candle up and then followed by another one, you just keep raising your stop with each bullish candle. Maybe you get a little retrace, a bottoming tail or some shit, and you keep going. Just raise your stop on your last 20%. That was a really bad drawing. I apologize, but I'll go over that more in depth here in a few minutes because remember, the pieces we bought here, 20% of that is going to be our core position that we're not going to sell until the weekly breaks down, which we found out earlier is all the way over here. Okay? So this 20% we bought right here, the 5% at the old high, and the 15% on the first dip, we're not going to stop out until our weekly breaks down and takes us out. And that's not our decision. That's the market's decision, all right? And then the rest of the 80%, we're going to be doing what we're talking about here, right? Taking a third off on your first move, first surge, whatever you want to call it. Okay, and then the second surge, which is usually 5 to 8 candles afterwards, you want to take off another 25 to 33%. Okay, assuming you haven't had a massive move, right, that you already took some off. Okay, we just want to make sure that 80% of our size is in with the cycle and out with the cycle. Okay, so here you get a cycle high, a bearish engulfing right into this old region. You're out 80% of your size. right? Now, let's keep something in mind here. Ideally, we're doing this so that price can make a cycle low and give us a setup somewhere down here or something, right? But that's not always going to happen. You're not always going to get full pullbacks. And often, check this out, you're only going to pull back to the 8 on the daily. And the same thing goes for on your main day trade time frame and on your long-term investing time frame. Often, you will only get pullbacks to the 8 in a very strong trend. But we're trading the daily, so we can't be entering 80% of our size in hopes of something like that happening, right? You know? So what we can do is after this dip, right, our daily cycle is high, so 80% of our size is off the table and we're not going to put it back on until the daily is back in a nice and favorable position. But what's this date? The 2nd of December. What we can do is we can be buying dips on the 4-hour. Okay? Because sometimes you'll get a cycle that, I'll just show you because it's going to happen, right? You'll get a cycle that does not retrace all the way and you only get a retrace to the 8. Okay? And it's okay to just have made money on this and then wait for your full daily cycle dips to get back in. Like, that's fine. And look, you get back in pretty much where you're exiting too. So it's okay to miss out on some of this, but I'm showing you how you can risk a little bit of your size, right? Not the 80%, maybe 10, 20%, and trade on your lower time frame and just your lower time frame while you're waiting for your daily to reset. Okay, so what did we say was December 2nd? That's right here. Okay, we're on December 2nd, and check it out. I know I haven't made a video yet on the fractal models. That'll probably be the last one. But this bottom exponential moving average on the 4-hour is the 8 on the daily. Okay, so if we're going to catch a bounce off the 8 without a cycle low, we're going to do it by catching a bounce off the bands on the 4-hour. Okay, bottom of the 4-hour bands equals the daily 8. Now, like we've talked about, this is not exact, right? It's not, if I put a dot here, it's not exactly on the 60 EMA, but they're very close. The areas are very close, and we can see that price here holds the 8 with the bottoming tail set up. No cycle cross, can't really do much there. But on the 4-hour, we get a bullish engulfing here right off the bottom of the bands, right? And we have a cycle cross on the 4-hour, so that we can actually do something with, right? That's a bullish engulfing, that's an entry. Stop below the low is only 2.5%. So maybe I took off 80% of my daily, right? Maybe I enter a small 5 or 10% here, see if I can catch another leg up. And then if I get stopped out, I'm done. That's fine. We just wait for the daily like we're already doing. Okay. All right. Immediately, we're not getting any follow through. We're getting topping tails at the descending bands. Cycle's still rising. We're keeping the stop right below the low. We get another engulfing, right? Still have the stop below the low. Now, your cycle does cross down on your 4-hour. So if you're trading with your cycle on the 4-hour now, you do the same thing, right? You enter here, 1, 2, 3 candles. You're taking 25 to 30% off. Now, this is a very small move, but it's not about the numbers. It's about the consistency and sticking to your method, right? I'm not trying to say I'm perfect and that I'm always doing this, but it's what I strive for, right? Okay, so you take a little bit off there. That way, if your stop gets run, you're not losing that much at all. Get another engulfing setup. Okay, we're still keeping the stop below the higher low because this is the 8 on the daily. If price is going to break down, it's going to break the 8 on the daily. Okay, but then we get more follow through. Okay, good time to take some profits into a lower high. Not into a lower high, sorry. In case a lower high is produced, right? Our daily cycle is descending, so we've got to make sure we're taking profits there. 4-hour cycle is getting a little high. Right? Yep, and then we get a little rejection there. And price breaks out further. So at this point, you can either keep your stops at the higher low, or you can be raising your stop with each candlestick pattern, right? You get a BCI here, you raise your stop. You get a topping tail takeout here, you can raise your stop. Here's another topping tail. If you take that out, you can raise your stop again. Nice bottoming tail. You can raise your stop there. Here's an engulfing. You can raise your stop here. Boom, another topping tail. Take out right. You can raise your stop to below that. Another engulfing here. You can raise your stop. And then boom, you get stopped out. Did you get in the whole move? Not quite. But you did pretty good with raising your stops with the candles. Or what you can do is just keep your stop below your entry, and whenever price puts in a higher low, you raise it. Higher low, raise it. Higher low, I know it's not much, but raise it. Okay, higher low, got an engulfing bottoming tail setup, raise the stop. Nice. Taking some profits when your cycle's high. Again, where have we gotten to now? The 25th. I went a little far. I went a little faster. Oops. Let me make sure I didn't skip something. Nope. Daily cycle is still coming down. So all this time, we would not really have a great opportunity to add big size in the daily. Sure, we've had some cycle crosses up. But often by the time that happens, it's a little too late to be adding. And it's always possible you just roll over. So ideally, you're trying to buy under halfway back down here, right? But on the 4 hour, able to make some pretty good sales, keep your stop. And then when price finally stops you out, that's when you're out. And the market took you out up here instead of you just raising your stop or deciding when to get out, right? You waited for the market to do it. Okay, you're holding the 200. Maybe you consider adding some back on an engulfing setup. Stop below the low. But at this point, you got to keep in mind, are you just trading the 4 hour, or are you doing this while you wait for the daily, right? If you want to be in and out with the 4 hour cycles, that's totally fine too. But if you're mainly trading the daily and you're just using the 4 hour to try and catch these holds of the 8 and tighter entries and exits, then you don't really want to get into a habit of just constantly buying dips on the 4 hour, right? It can be a little dangerous. All right, so let's go look on the daily now and wait until we get some good risk reward on our cycle. Here we go. This is a nice dip here. We have broken down from the bands on the daily. So it's possible we would make a retrace to the 200 down here, right back in front of this level. But given I sold mine back here and price went all the way up here and now has retraced. Let's look at a fib. Price moved up, it has retraced to the 618, over halfway already. I'm happy buying some back, right? My cycle is getting low. Even if we pull back to the 200, that's fine. The key higher low stop is still down here, right? So anything in front of there, the closer I get, the better, the more I can add. The cycle is not crossed, so we're still waiting for that to add most of our size, but we're nibbling 5-10%. Right, and there we go. We get the cycle cross. We get the big bullish engulfing setup. Stop below the low. And buy there. Let's see if we could have gotten a tighter entry on the 4 hour. Because at this point, the cycle was crossed, right? The day before. So let's see. What was this date? The 19th of January. Okay. And honestly, it does not look like there was much better entries. Seems like, yeah, you had the, yeah, no, you didn't get the cycle cross until this massive candle. So this was a case where your entry, right, just happened to be further away from your stop, and it means you can't quite use as much size, right? Did I click the wrong? Oh, yeah, I clicked XABC. Whoops. Oops, I didn't mean to do that, fellas and gals. All right, if we're buying here after a big candle, it's nice we're buying into strength. We got the cycle cross on the daily, but our stop is now 16.7% away, right? So we can't use as much size as if we got a really tight entry back near the low. But we get better confirmation cyclically that we're buying into strength. Okay? And so now that we've moved away from it, you can raise your stops from here up to here. Right? Other than that 20, that original 20%, right? Remember, that is only going to be stopped out if we break down on the weekly, which is a higher time frame, okay? All right, so now we'll move all our stops except for that 20% to here. Okay. And now, much like back here, we're happy longing anything into this level that we can get, right? And if you get stopped, you get stopped. We'll buy the next dip. Okay. Here we go. Cycle low again. Let's see if we can get the cross. Boom. There it is. Cycle cross. Another engulfing right in front of this level perfectly. Okay. So now your daily cycle is crossed. You can add more size, right? Maybe you added a good lot here, but because you were so far from your stop, you couldn't quite add as much as you wanted. And then here, price gives you a little bit better of an entry, only 10% from your stop, so you can add almost twice as much as you could back then, right? And now our cycle's crossed, so we're going to start to take into account our take profit rules again, right? First 2 to 3 candles that go in our favor. Oh, excuse me. We're going to long, right? I'll keep my stops outlined. And again, in this scenario, you can have the stop right below the setup if you want and get really tight risk. I just, more often than not, I choose the stops with my market structure.